Hello friends, in today's video I will show you the 6 most used indicators. I hope after watching this video, you will have a better understanding of the most used indicators while trading. This video's goal is to give you a basic understanding of the indicators, and in future videos, I will give more information about each of the indicators. Let's keep the intro short and dive into the indicators. If you are not a new trader, you must know that moving averages are the most popular indicator of all time. So let's start with moving averages. Simple moving average, also known as the SMA, is one of the most used indicators in the world, if not the most. Moving averages are used to identify the direction of the trend. The simple moving average is the line you see on the screen. Moving averages are one of the most important indicators, because of 2 reasons. First, they can act as support or resistance. Support and resistance are the psychological barriers that price cannot get through. And second, the moving average shows us the direction of the trend. The slope of the moving average line indicates the trend's direction. If the slope of the line is positive, it means that there is an upward trend. And if the slope is negative, it means there is a downward trend. Since moving averages show the direction of the trend, nearly all of the investors and traders use them. I have trader friends who trade using just moving averages. I don't think it is a great idea to trade with a single indicator, but I am telling you this to show you how useful they are. You can use 50-period or 200-period moving averages while trading. 50-period moving average shows the short-term trend, while the 200-period moving average indicates the long-term trend. And long-term trend is one of the most important information about a stock or a commodity. That is the reason that even long-term investors use the moving averages before buying a stock. I use moving averages both while trading, and also while investing. Similar to the simple moving average, we have the exponential moving average. They look like simple moving averages, but they are calculated differently. The exponential moving average gives more weight to the recent price data, so it reacts way faster than the simple moving average. So, it's a better option for day trading in my opinion. But, the exponential moving average has some downsides too. Since it reacts fast, it gives more false signals. So it is better to check both of them before trading. If you want more detailed information about the moving averages, you can watch the video I created about simple and exponential moving averages. You can find the video's link in the description box. If you are a beginner trader, be sure that you watch the video, because moving averages are the best indicators that a beginner trader can use. Our third most popular indicator is the MACD, also known as the moving average convergence divergence. If you are not a beginner trader, you must have seen MACD before, since it is used by most of the traders. And when it is used correctly, it can be highly profitable. MACD has 2 lines. One red and one blue line, and these lines are simply exponential moving averages. The green and red vertical bars are the difference between 2 moving averages. The MACD indicator gives an idea about the current trend. If MACD lines are above the baseline for a long time, it can mean a positive trend, and if the lines are below the baseline for a long time, it indicates a negative trend. MACD shows us the momentum of the instrument, using these averages and bars. MACD crossovers indicate a change in momentum. For example, when the blue line crosses the red one below the 0 point, it indicates a forthcoming momentum, so it can be used as a buy signal depending on the situation. In my profile, you can check the video, in which I risked a simple MACD strategy 100 times. The next indicator we're gonna talk about is RSI. I am sure that most of you guys have heard about the RSI before. The Relative Strength Index is really easy to read. RSI indicator compares recent price changes in order to decide if the price is overbought or oversold. You can see the RSI indicator ranges from 0 to 100. If the RSI is higher than 70, it means the instrument we are looking at is overbought. And if the index is lower than 30, it means that the instrument is oversold. RSI can stay over 70 for a long time if there is a strong trend. But you should know when to use the RSI and when not. You will not make any gains if you buy any time when the RSI is oversold, and sell when the RSI is overbought. Actually, I tested that strategy 100 times in my last video, you can check that out. And as I told you, it was not that promising. Because the RSI indicator works best under some conditions. You can use the RSI indicator when the market moves in a range, or you can use it to hop on trends during pullbacks. So, before you start to trade with the RSI, please learn when to use it and how to combine it with other indicators first. I will make more videos about the RSI indicator in the future, since it is used in many strategies. The fifth indicator I want to show you is the Bollinger Bands indicator. Bollinger Bands have 3 main components. the 20-period simple moving average in the middle, the upper band, and the lower band. These bands are simply two standard deviations plotted away from the moving average. At this point, you might ask yourself, what does the standard deviation has anything to do with it? But these bands are really important, because standard deviation indicates the volatility. So, if the upper and lower bands are away from the moving average, it means the market is volatile. And if the market is not volatile, bands get tight, looking like they are squeezed. If the bands get too tight, it can indicate that huge volatility is about to come. These bands also show the overbought and oversold points, just like the RSI. If the price touches the lower band, it means that the instrument is oversold, and it can pivot from that point. I actually created a detailed video about the Bollinger Bands, in which I also showed 3 trading strategies you can follow. You can find the video in the description box. You should definitely check that out before you start using the Bollinger Bands. Our sixth and the last indicator is the stochastic indicator. It has many similarities with the RSI indicator. Just like the RSI indicator, it also shows the overbought and oversold points. If the stochastic is over 80, it indicates the stock or the pair we are looking at is overbought. And as you can guess, it indicates the instrument is oversold, if the stochastic is below 20. Stochastic is a momentum indicator, and it can be used to spot a possible trend from the beginning, or it can be used to find where a trend might be ending. As you can see, it has 2 lines. With the help of these lines, the stochastic indicator gives entry signals. And thanks to these signals, stochastic can help us catch a trend at the very beginning. The stochastic indicator gives a buy signal when the blue line crosses above the red line at the oversold point. And it gives a sell signal when the red line crosses down the blue line at the overbought point. But similar to the RSI, it can give many false signals. So you must use stop losses while trading with the stochastic. Before finishing the video, I want to remember you guys some rules. First, you should remember that no indicator can predict the future of an instrument. They just tell possibilities. And trading is a probability game. So you should select a strategy with a high winning rate, and trust the long-term gains. Second, you should always backtest strategies at least 100 times before using them. You can see, I create backtest videos of strategies in my channel. You should do the same before trusting a strategy. Third, don't overcomplicate your trading. Do not open tons of indicators on the screen you won't check. Just use the indicators you need in the current situation. And last, do not blame the indicators if you are having a losing streak. If you backtested your strategy, you should know your win rate even before opening a trade. So don't blame the indicators if you didn't do your homework. If you have any questions, please don't hesitate to shoot them up in the comments section. If you find this video helpful, please like it. It really motivates me to create videos. And if you are interested in these kinds of trading and investing videos, you should definitely subscribe to my channel. You can also comment down any kind of video you want me to create. Thank you for watching, everyone. Have an amazing day.